afternoon. This is the Chorus Call conference operator. Welcome, and thank you for joining the Tinexta Group consolidated results at the 30th of June 2021 conference call. After the presentation, there will be an opportunity to ask questions. At this time, I would like to turn the conference over to Mr. Joseph Mastragostino, Chief Investor Relations Officer of Tinexta. Please go ahead, sir.
Good afternoon and good morning to the folks in the U.S. Thank you for joining Tinexta's first half 2021 results presentation. Here with me today, Pierandrea Chevallard, CEO of Tinexta, Oddone Pozzi, CFO.
Good afternoon, everybody.
As a reminder, all the relevant documentation of the first half 2021 results can be downloaded from our company website in the Investor Relations section. For the purpose of this call, I will go over the first half 2021 highlights and updates, as well as provide all the relevant information related to the recently announced M&A. Oddone, instead, will go over the first half 2021 financial results, as well as the business unit performance, providing us with deep dives. The last part of the call will be dedicated to Q&A. A recording of this conference call will also be available on the company website, and it will be posted upon completion of this call. At this point, I will kick it off by turning to page 3 of the presentation. The first half 2021 results are on track for delivery, showing continuous momentum and providing support for growth. Please note that, in order to allow as complete analysis as possible, 1H21 results are compared both at constant 2020 perimeter as well as on a 2021 perimeter, which includes all of Tinexta's companies with the addition of the newly acquired ones. Revenues came in at 177.8 million in H121, posting a plus 43.6% increase versus prior year, or 12.6% on a 2020 basis. For a matter of completeness, we are also providing EBITDA adjusted, which excludes stock options and other non-recurring items, as it is management's view that such indicator better represents the real performance of our business. For that matter, EBITDA adjusted came in at 42.3 million in H1, posting a plus 21% growth versus prior year, or a 6% growth on a 2020 basis. EBITDA reported, which is after stock option, came in at 40.3 million in H1, posting a plus 17% versus prior year, or 2% growth versus 2020. In terms of EBITDA adjusted margin, that came in at 23.8%, and EBITDA reported margin was 22.6%. EBIT was strong and grew 22% versus prior year, at 26.4 million, and EBIT margin was at 14.8%. Noticeable was net income, which was 20.6 million, or close to 30% growth versus prior year, or 16% on a 2020 base. Cash flow was solid at 29.7 million in H1, growing on an LTM base to 67.5 million euros. Net financial position was 205.2 million, and leverage was 2.4 times, entirely reflecting the recent acquisition. In terms of key metrics, from a preliminary analysis conducted on 1H21 results, 66% of Tinexta's group revenues are recurring. Growth came from all of our business units, which contributed to growth versus the prior year. Digital Trust grew 14.9% in revenues, with EBITDA growing 11.8%. EBITDA margin was 24.5%. Cybersecurity revenues reached 34.6 million, and EBITDA margin was above 10%. Credit information and management increased 9.7% in revenue, with EBITDA growing 12.5%. EBITDA margin was 29.5%. Innovation and marketing services posted a healthy 23.6% growth in revenue, with EBITDA rising 14.6%, and with an EBITDA margin of 41.1%. The group carried out considerable M&A activity in all of our business units. In fact, we completed successfully 3 key deals and 1 MOU between the months of June and July of 21. In order, on the 21st of June, we purchased 100% of Intesa Sanpaolo for value. This was a cashless transaction with Intesa Sanpaolo core value being conferred into Innolva for a 25% exchange. The aim is to establish a single integrated domestic group for higher value-added services to SME and also to strengthen the leadership of the company. On the 1st of July, we signed an MOU with Leonardo SPA to collaborate on Industry 4.0 and data security projects for the country's manufacturing systems. The objective is to provide the market with effective and comprehensive responses to reduce the risk of cyber attacks in the context of digital transformation. Then, on the 16th of July, we bought 100% of financial consulting lab ANSI Lab to further strengthen Warrant Hub's commercial presence in Lombardia and Veneto, providing services mostly targeted to SMEs. Lastly, on the 21st of July, we acquired a majority stake, or 60% of Chert Europe in France, which is the second largest market in Europe. Tinexta, therefore, enters the French market with the purchase of one of the largest certification authorities. That means strong internationalization for InfoCert, which is now allowed to sell its solutions in France. Turning to page 4, let's discuss a bit more on Intesa Sanpaolo for value. Just to give a little bit of a context to our group, this is a transaction under the Credit and Information Management segment. It is a cashless transaction with equity exchange at the segment level. The transaction sees Intesa Sanpaolo transfer 100% of its shares in Intesa Sanpaolo for value to Innolva. The exchange of 25% was valued at an equity value of 55 million euros. There are put and call options on the 25% share capital held by Intesa Sanpaolo in Innolva, subject to determination of the partnership and or certain results with respect to planned targets. These put call options are exercisable in 2 years between the period of 2025 and 2026. There's an earn-up of up to an additional 5% in the event that certain planned objectives are exceeded and ratified with the approval of Core Value's 2025 financial statements. In the final year of the plan, therefore by 2025, the transaction is expected to lead to additional revenues between 55 and 60 million euros, and to an expected combined margin consistent with that of the various business units, namely CIM and IMS. We successfully completed the closing on July 21st. Turning to page 5, Leonardo and Tinexta signed an MOU to protect the Italian manufacturing sector from cyber attacks, and in particular the sectors which have proven most vulnerable in these attacks in the past years. You're looking at manufacturing companies, financial and services companies, the textile and fashion services, as well as utilities. Leonardo and Tinexta will integrate their respective vertical technology components in the areas of the Internet of Things, operational technology, as well as digital trust. We have not provided any financials here because the partnership will be directed by a joint steering committee which will evaluate and therefore identify all future initiatives. Turning to page 6, here it's about innovation and marketing services, in particular Warrant, which purchased 100% of Financial Consultancy Lab and Financial C Lab. The enterprise value for this smaller acquisition was 100% of the capital was 4.5 million euros. Both of these companies are based in Brescia, and there is strong commercial presence in the regions, again, of Lombardia and Veneto. The companies mainly target SMEs and will strengthen Warrant's Hub's penetration in these two highly strategic regions. Turning to page 7, this is a very interesting and important deal which brings a strong international footprint to Tinexta. The group purchased the majority stake, or 60%, of Chert Europe, which is an extremely well-known brand in France. It is based in Paris. It has a leading market share with 40% of ADA certification. It holds full authorization and accreditations for the issuance of all certificates in the French market. And above all, it has solid business and commercial relationships with important trade associations, namely lawyers and notaries, as well as large retail resellers for digital services. From a strategic standpoint, Tinexta via InfoCert enters the French market. And InfoCert is therefore allowed to expand its services and products in France. The market is extremely attractive and exciting because the total digital trust market in France is valued at 150 million euros and is expected to grow 23% on an annual base, reaching €500 million by 2025. The company we acquired is currently the third player in France with about 10% market share. Let us give you some numbers. In terms of enterprise value, the 100% of the capital is 66.7 million. Czech Europe, on a 2020 base, generated 14 million of revenues and a pro forma EBITDA of 5.2 million, or more noticeably, 37% margin. The 60% stake is equal to 43.8 million, which includes 3.8 million of earnout relative to 2021 and 2022 performances, and no debt is envisioned at closing. There are put-call options on the minority interests that are exercisable by 2023. These put-call options of the minorities are valued at 28.4 million for a total investment of around 72 million euros. The 60% stake will be funded by existing cash. Closing is expected by fourth quarter of 21. Turning to page 8, most of these items have already been commented, so I will leave it to Oddone for his part.
Okay. Good afternoon, everybody, and thank you, Joseph. As Joseph has already went through the comment of the performance of Q1, that is perfectly aligned with the objectives that the group indicated at the beginning of the year. So the revenue went up quite significantly during Q1, both on a like-for-like basis as well as with the change of perimeter. On like-for-like basis, the revenues went up close to 13%, and this is a very encouraging and positive result. If we move to the EBITDA before stock option came at 41.2, but this included also a portion of expensive, non-recurring expenses we faced in order to promote and manage the acquisition and M&A processes. So the EBITDA adjusted is 42.3, that's very close to 24%, and compared to the 26.6% of previous year. This is driven by a change in the mix of activities compared year on year. Definitely the inclusion of the cybersecurity as expected, as we already communicated to the market, is squeezing a bit our margin profitability, while the rest of the business was keeping very interesting and positive profitability. EBITDA overall closed at 40.3%, growing on a like-for-like basis at 6.1%. Depreciation and amortization went really accordingly to our expectations, slightly above prior year, but we have to consider that we increased the perimeter of our activities. Financial charges went up a little bit, driven by the different perimeter we have and following the acquisition we performed during January 21. When we move to profit after taxes, is going up 15% compared to previous year. And in the income taxes, we got a benefit that we booked during the last part of Q2, as we had the opportunity basically to get a tax benefit by anticipating less than 1 million euro cash and having therefore the opportunity to deduct in the future in a better percentage the relevant depreciation. So basically, the income taxes were 3.8 million, and this led to a net profit that is 20.8, is very close to 12%, growing close to 30% compared to the previous year. If we go to the balance sheet, we do see definitely increase of net capital investment. This has been driven by the acquisitions. The group performed more than 100 million euro acquisitions of Corvallis, Yoroi, and Querio that occurred during Q1, And the group continue to handle in a very positive way the working capital that is even improved compared to December and much more improved compared to June last year to be negative by 50 million. The net financial position grow to 205 million compared to 92 million at the end of the year. Like I said, we have basically acquisition for 110 million. We distribute dividends close to 30 million, and we perform the put adjustment on the put adjustment on basically on the cybersecurity acquisition, driven by better results expected from this company. The buyback program went up again. We acquired shares for almost 6 million, and as of today, definitely shares we bought are well below the current market price. When we look at shareholder equity, it went down a little bit, basically driven by the profit of the period, of course, is 20.8 million, is increasing. We distributed dividends, and obviously the buyback program and the put adjustment is decreasing the total value of the shareholder equity. The net financial position is, like I mentioned before, is increasing, but we kept a very positive working capital improvement. The working capital improvement has been delivered also in Q2, despite the fact that we face a cash out for taxes in Q2 of 30 million compared to the 6 million of previous year. So this means that we were able to continue to keep a very high conversion of the EBITDA in cash. If you look at the last box at the bottom of the page 12, in the last box in the right part, the LTM free cash flow has improved quite significantly if you compare year on year. Last year, the same time as this year was basically 47 million on an LTM basis. This year is 67.5. This includes basically an improvement, cash generation from working capital in the range of 20 million. That is definitely a very, very positive result. At page 13, you may see that the net financial position EBITDA ratio calculated on LTM basis is at 2.4 times and perfectly aligned to our expectation to land by the end of the year in the range of 2 times. As you may see here, basically the free cash flow is 30 million, then we distributed dividends, and the acquisition overall combined with the put agreement are calling for 120 million of worsening the net financial position, as explained before. In page 14, you may see it on an LTM basis. Basically, what is changing here is that the free cash flow overall is at 67.5, as I mentioned before, so very, very strong cash generation that is supporting our programs of M&A, and the acquisition over the last 12 months accounted for 145 million euro. Let's move now to the different business unit performance. We talk about the revenue going up on a like-for-like basis at 13% and 44%, including the change of perimeter, while the EBITDA is growing 6% on like-for-like basis and more than 20% as in total. Basically, as you may see here, all the business units were able to increase both revenues and EBITDA. And this is exactly what we do expect when we share with the market the projection and the expectation for the year and the following years. I'm going to deep dive in each business unit in the following page, starting from page 17. Here you can see The digital trust, we are very happy of the result of digital trust, that it was able to grow basically 14.9%. It means that, total revenues amount of more than 60 million is a very solid and important growth. And if we exclude, non-recurring costs and stock option costs that may fluctuate year on year on a same perimeter basis, basically the EBITDA is growing 12% above the double digit. Here the mix is driven slightly below EBITDA margin percentage, but we are not at all worried of this. This has been driven by a different mix of what we delivered, and perfectly aligned with our expectations. We do believe that this solid growth is expected to continue during the rest of the year, having the right mix between off-the-shelf product and capability of delivering digital transformation project as we have done. Also, speed is doing very well, is growing fast, even faster than our expectation, and this is partially affecting our margin, but the revenue growth is very solid. We move now to cybersecurity here. Also, the cybersecurity, although we have no comparison to the previous year, even pro forma data are not available. As you know, the cybersecurity is a mix of three different companies, and one of the three companies was already a merge of different businesses. But at the end of Q2, we may say that both revenues and EBITDA are aligned with our expectation. Definitely, if we look inside the 35 million we delivered in revenue, they are, definitely Corvallis business part and system integration is still the most important part. But the revenues from Yoroi and Swascan are growing basically aligned with what we expected. This is very important to us. Now it's 2 quarters we are consolidating this business, and we do believe that this is on the right track, is aligned with our expectation. EBITDA margin is at 10.1%, aligned with our expectation. We do expect in the second part of the year the EBITDA margin growing faster. If we move to credit information and management, despite a still tough market, because from one side, now, at the beginning of the year, still we had some limitations in the business and the circulation. So we have to say that a growth close to double digit is very, very positive and very encouraging. We have to say that compared to previous year, our revenues related to business process outsourcing with reference to Fondo Centrale Garanzia are slightly below as expected, but from another standpoint, we do expect that this kind of business to continue also in Q3 and Q4 and to reach perfectly the goals that we share with the market in the early part of the year. Compared to previous year, the real estate activity is improving quite significantly. We had a very solid growth here, and the management was really able to capture all the opportunity the market offered, and was able to deliver the very solid growth, and as well as a very solid improvement on the gross margin. And overall, we may say that also the pure business information and credit information business grew compared to the previous year, and this is definitely a very solid result, and a very good news for us, as this is a market that is, let's say, at least shrinking a bit. So we are also glad that also this part of business was able to grow both in revenue and EBITDA at the double-digit level. Let's move now to innovation and marketing services. You know that here basically we have three main components. We have the components of Warrant with consultancy to let's say Industry 4.0 services and opportunity. Then we have our consulting businesses to export, and then we added the newly acquired company that is Querio, that is consolidated also from January. So overall, on the same perimeter basis, the revenue was able to grow. Also, we are more than double digit, and this is definitely very positive. Comart start again to grow, and and compared to previous year, and Warrant also was able to grow compared to previous year, despite the market that is offering to its client, let's say, lower tax benefit compared to what was happening in 2020 and what is expected to happen in 2022. We knew that this year we were facing this situation with lower tax benefits for our customers, and as part of our revenue is linked to basically to the benefits that our clients, we knew that we may suffer a bit. In any case, the revenue went very well, and also Querio delivered in just one quarter 4.1 million euro of rent. If we move to the EBITDA, also here we were able to grow on a same perimeter basis at 3%. With the addition of Querio, we grew by 15%. So also here we are glad for the results we were able to deliver. If we move to the closing remarks, after Q2, we may say that we are perfectly on track of what we shared with the market during February 21, and compare also to our internal budget, we are totally aligned. So we are here to confirm basically that we plan to deliver revenues in the range of 370 million and EBITDA at 96 million. Net financial position, EBITDA, is expected to be in the range of 2 times, as already shared with the market.
I would ask the operator to open to Q&A, please.
Excuse me, this is the Chorus Call conference operator. We will now begin the question and answer session. The first question is from Isacco Brambilla of Mediobanca. Please go ahead.
Hi, good afternoon, everybody. Thanks for taking my questions. I have three. The first one is on your guidance. If my math is correct, your 96 million euros EBITDA target implies basically a flat EBITDA growth in the second semester, excluding the contribution from the cybersecurity business unit. This would imply quite a marked slowdown compared to the trends seen in this semester. So I was just wondering if there is some element that you can specify in some of your business units which make you so conservative in terms of implied growth for the second semester, or if it's just a general conservatism because of the macroeconomic context we are living in. Second question is on the CertEurope deal. Can you provide us more color on the top line synergies which may be potentially unlocked for InfoCert and for the other business units of Tinexta Group? And the very last question is on M&A. You have been very, very active, actually completing great deals, by the way, in the last month. Should we expect your M&A campaign to be put on hold in the coming quarters, or you have further targets currently under evaluation?
Okay. Let's start from the guidance. No, we do not believe at this stage that this is conservative. We shared with the market the 96 million target based on our internal projection and budget, and as of the end of Q2, we are perfectly aligned. So we know that the second part of the year is the most challenging part. As you know, we are still a lot of room to do, but we do not believe this is conservative. Definitely, it's an opportunity will come as usual. The group is going to take them, but as of today, we think that our projections are very balanced. If for the second question of SET Europe, definitely this is an acquisition of InfoCert, so it's in the digital trust area. We do believe that there could be opportunity of synergies between the two companies, as you mentioned, basically on the revenue side. We do believe that InfoCert, compared to many other companies around Europe that are operating in the same arena, InfoCert has developed a very strong digital transformation management activity. This is what is making InfoCert one of the most interesting companies around Europe, and this is what InfoCert is looking to bring to the French market, its capability, working together with a very solid baseline, very solid customer relationship of SET Europe. We do believe that InfoCert will be able to help the company to enter also the market of projects, the market of digital transformation management, having the opportunity, therefore, to rank a very solid growth down during the time. M&A, we are not, as usual, we are not disclosing any target in advance, but as usual, as Mr. Chevallard has done over the last 10 years, the group was able to pursue and to achieve a very important target in the M&A. We do believe that the group is a solid track record. The group has a solid cash generation. Banks are there to support us in the acquisition. So, as shared during the plan presentation, we will continue our process of M&A, looking for targets mainly in the digital trust and innovation marketing services on international basis. I'm talking about significant targets. Then we may have some add-on, as we have done for the project that we have done, but it's small thing. For other business units, we will see if the right opportunity will come, we will be ready. But the priority is what we already mentioned at the beginning of the year. And so we will continue. The goal is to have InfoCert very well positioned in Europe, at least with presence in France, Spain, or if other countries may have an interesting target, we will look at it. And the same thing we think may happen for Warrant in innovation and marketing services.
Thanks very much, Oddone.
Thank you, Isacco. You're welcome.
The next question is from Russell Pointon of Edison. Please go ahead.
Hello, everyone. A couple of questions from me. First of all, on digital trust, I think I asked this question in the last quarter too, but your 2-year growth rate on digital trust now is over 20%. I'm more interested in actually where you're seeing the growth which is coming through, which is stronger than expected. Could you give some, talk about which products are doing better than you might have expected at the start of the year? And the second question is which combines two divisions really, in credit information and management and innovation and marketing services. There was a bit of margin compression Q2 this year versus Q2 last year. I appreciate the margins in these businesses move around a bit quarter by quarter basis, but this time last year we were right in the middle of the pandemic and lockdown. So there may be some business mix changes in there, but could you just give some better feel for why there has been that margin compression? And the third question is on cybersecurity. Obviously, you're looking forward to much higher margins in the second half than the first half. Is that really because the first half has just been a bit of integration expense, that kind of thing, and is therefore the second half a bit about accelerating revenue momentum and those costs dropping away? Thank you.
You're welcome. Let's talk about digital trust. We never mentioned to have a digital trust growing 20% per year. We always mention that also the plan that we shared in February was a growth in the revenue below double digit and an increase of EBITDA above double digit. This is our long-range plan. If we look at just first start results, definitely we have not to judge the performance on a couple of quarters. This has basically been driven, and we grew in terms of revenue above expectation, and we had a slight compression of the margin. What has happened is that we had a little bit more than expected revenue from off-the-shelf products, and as well as we have with one of the largest customers in Italy, a big deal that includes also a resale of software. So the combination of the two things in just one semester has increased the revenue above expectation and depressed a little bit the EBITDA margin. On the full year, we are here to confirm that we are expected to deliver exactly what we shared with you. Probably revenue will be a little bit higher, and the EBITDA may follow on the same basis. But I think we are talking about really small things if we look at just 1 hour. If we talk about innovation and marketing services, we have to consider that last year, basically, the activity of Comarch was really depressed during Q2 especially. And so the weight of warrant business increased. This is the reason why also the margin has increased so much at 44% as a blended. This year, is regrowing now Comarch that has embedded lower margin, so the mix is penalizing a little bit. On top of this, but we were expecting this, during this year, warrant business is going to be impacted, as I mentioned before, by the different, tax benefit that the client may have driven by the current budget law. We do expect, in case, in the second part of the year, that is the most important part of the year for warrant business, in particular Q4 is the strongest quarter. We do expect the margin to be restored, and even more importantly, value, the EBITDA in absolute value to be delivered. So I would say that this is a timing situation, and already the budget law for 2022, for example, is expected to be very different. So with the significant increase of tax benefit for our customers. If we talk about cybersecurity, we have no comparison that we may share with the market, as they are not, certified, and they are not data that we consolidated previous year. But the revenue is perfectly aligned with our target, and the EBITDA margin is what we were expecting. Definitely the second part of the year, also here, is the part where we deliver more revenue, and definitely we deliver more margin, so the profitability is going to increase. And so also here overall we think to deliver what expected. So by the end of the year, we do expect the cybersecurity to deliver an EBITDA margin range of 12-13%.
As a reminder, if you wish to register for a question, please press star and 1 on your telephone. The next question is from Carlo Maritano of Intermonte. Please go ahead.
Good afternoon, everyone. I just have a couple of quick questions. The first one is on the tax rate. I was wondering, what do you expect in terms of tax rate at year end? excluding the non-recurring items you register in the first part of the year? And the second one is related to the small acquisition in the innovation and marketing services. So what is the contribution in terms of revenues and the EBITDA of the two acquisitions, so financial consulting and financial lab? Thank you.
Okay, looking at tax rate, I will make it very, very simple. Last year, we got 1.1 benefit from Decreto Sostegni related to IRAP, and this year, on the same subject, we have 0.8. So year on year, you may consider this as a standard, and you may apply them when you calculate the year-end tax rate. Then we have a one-off benefit that is net is 3.4 million that you may deduct when you run the usual tax rate. This 3.4 million is what is called in Italy affrancamento. We had a cash out of 0.8 million euro, and we recorded a benefit of 4 million. So if you mix the two, you have a one-off benefit of 3.2 million. That's all. So normal tax rate with this benefit from what we call here affrancamento.
Okay.
About the small acquisition in innovation marketing services, here we are talking about add-ons that we perform in order to complete our offer, in order to cover better some areas of the territory. So we do expect an EBITDA margin in the range of normal margin of consultancy that may be in the range of 20-30%, but nothing significantly to consider also the cash out we have. And the multiple are in a very, very low range.
Okay, thank you.
You're welcome.
For any further questions, please press star and 1 on your telephone. Mr. Mastragostino, there are no more questions registered at this time. Excuse me, there's a follow-up from Isacco Brambilla of Mediobanca. Please go ahead.
Hi, just a very final question from my side. On the performance of Comark, can you give us some more details on the performance in the first semester, and also on the outlook for the overall business, which should be supported, I guess, in the future from government measures to support international expansion of SMEs?
Yes, we have to say that Comark, last year suffered a very difficult, especially Q2. Then the company was able, starting from Q3, to being able to combine a remote support with the physical support with the company. We have to say that Comark during basically the first half was able to deliver results growing both in terms of revenue, EBITDA compared to previous year, not yet a level of 2019, but definitely very good results. And we do expect also the second part of the year to continue to grow compared to previous year and to deliver a year-end result definitely better than previous year. But again, also here, aligned with what we expected at the beginning of the year.
Mr. Mastragostino, this was the last question. Back to you for any closing remarks you may have.
Thank you very much for connecting to Tinexta's conference call. If you need any additional information, please don't hesitate to contact us. Have a good evening. Bye.